So the markets woke up today and woke up in a big way, led higher by small cap stocks. Really, it was kind of the prospects of the increasing odds back to high percentages of a Fed rate cut coming from the vice chair of the committee, the FOMC committee, John Williams from the New York Fed. So small cap stocks surged, huge gains in small cap stocks. Home builders, interest rate sensitive areas surged. Regional banks, as part of that small cap surge, they did very well. Sorry about that. And volatility collapse, right? A big drop in volatility. There's a nice, good rotation here. So I'm going to break all of that down. Like, we look a lot different today than we did yesterday at the close. I'm going to break it all down in today's preview video. So let's go ahead and get started. Today is Friday, November 21st, 2025. This is the market outlook from marketscholars.com. My name is David Settle. Before we get going too far, I invite you to click this link right here. You're going to want to do this today because when you click that link, it takes you to this page, our basic subscription page. Today's market outlook video, the full version of the video, is free for all of our basic subscribers. And again, to be a basic subscriber, it's free, right? So just click this join free button, fill out this form. That will give you access to today's market outlook video, the full version for free, so you can be able to watch it over the weekend. So click that link. This link right here will take you directly to it. This is what it will look like when you're not logged in. So just click this login button if you're already a subscriber. If you're not, click join free. Click that blue button. It will take you to this page. Click the orange button. It will take you down to this form and just sign up. Again, there's no cost, no commitment, and just you get access to that. And then this, of course, is what the blog post looks like. With the basic subscription, you get access to all of our blog posts every day, right? The Friday videos are free, but every other day you get the preview videos as well as all the information that's in the blog post. So you want to be able to check that out. It's a very good summary of what happened, why it matters, right? And then what it means going forward, what we're going to look for going forward here, and some educational thoughts on that as well. Again, all of that for no cost by just joining at our basic subscription level. All right, let's take a look at what happened here today. So we rebounded in a really, really good way. So we were up, we're off the highs, and that's not bad. But we still finished positive, about a percent positive here on the S&P. We avoided a cluster at the lows of the day today. We had a cluster, which probably not a bad thing either, because we tend to bottom out when we get these oversold clusters. But we are in the reversal zone still. The intermediate line's in the reversal zone, and you notice it doesn't stay in the reversal zone for very long. When it does get down there, we tend to get some short-term bounces pretty quickly, and that's what I would expect. I expect the next week that we should get a pretty good bounce on both the momentum and the near-term lines. The big news of the day was the small cap index, right? The Russell 2000 just blew things out of the water, and that's a very good sign for the markets. It was up almost 3%, pretty much completely. It did get a cluster yesterday, pretty much completely reversing yesterday's move. So really good move on the Russell 2000, on the small cap index, breaking out and maybe leading us up. Maybe that's a good sign for the markets after getting that oversold level, that now we're going to start moving higher, considering that's just a easy Fibonacci retracement that will easily move back higher to old highs, if not eventually higher highs, would be my expectation. Another really good sign today was the pop in the breadth. So the breadth indicator jumped up to the number of stocks above the 50-day moving average, jumped up to 208. So back above. Remember, we had been dropping. We dropped to like 159 yesterday. Big jump up. In fact, one of the bigger jumps you can see on a one-day basis, that's what this is looking at. It's one of the biggest jumps we've seen since coming off the April 8th low. So this is the kind of breadth move, especially with the New York, with the advanced decline line being at the high levels. This is the kind of breadth move that can bounce us off of lows, right? That's what we've been looking for. We didn't get it over here with that little bounce. This one looks a lot better, right? Especially, like I said, with the number of stocks above the 50-day looking like it is. One of the biggest beneficiaries of the fallen yields today was Homebuilders. Homebuilders, which have been kind of beaten up, broke the 200-day moving average this week on Monday, fluttered around below it for a few days the rest of the week, finishing very strongly today. Again, one of your bigger moves higher on the stock that we've seen in a while, right? So, you have to go all the way back to August 22nd to get as big of a move to the upside there. on the home builder index. They stand to really benefit. There's your August 22nd would be right here. That would be your, excuse me, right there. Would be one of your, so like we haven't had a big, it's close there on October 14th, but this is a pretty good size move. Now we're not above the value area. We're not back above this 30-day moving average. We have crossed the 8 and the 17, however, so we need to build on a little bit more. But that's a good sign for that, for kind of where yields are expected to go. The other big beneficiary today with the small cap index doing well was the banks, right? These regional banks, you can see, they are on the cusp of breaking through some resistance levels on their own, right? I mean, depending upon how you draw it, you're either above the line or you're really flirting with it, and you're really flirting with that 50-day. Now you have the point of control above us, so it's not like taking off here like a rocket ship. But considering this higher low and the MACD now close to turning positive and the stochastics coming off what would be a bullish low point, that's a good sign for the broader market as a whole. And remember, when the markets bounce off of intermediate lows, everything tends to bounce, especially these small cap stocks and these smaller sectors. So this is a very, very good sign that today might be the start of an intermediate bounce back up to the upside. And one of the other, finally, the last really good sign is the significant drop in volatility. Big time drop to the downside on the VIX, back well below 100%. We did not get into neutral territory, but at least we're back below 100%. The VVIX is still above 118, but a big drop in the VVIX as well. So that's a very good sign that the VIX is dropping back down with this kind of big candle, big body candle that's filled in, as well as the VVIX, right? We're not out of the woods. We're not back below 110. We're not back below the 200-day moving average on it, but getting back, ending the run that we've had, at least, not building on yesterday's rally is a very good sign for both of these volatility indexes, and for that matter, for the rest, for risk appetite in general. It seems like yesterday might have been the washout. We might still go down Monday or Tuesday to slightly lower lows, but it seems like the bottom is built in, and then now over the next so many weeks, we should be able to build off of that and bounce our way back up after getting the zigzag chart of the 5% zigzag chart. Now we should start to build our way back up to a new green tag, most likely in the double digits. And that's our market outlook preview for today. All right, so that's the preview video. Remember, today, as I mentioned earlier, all of our free subscribers at Market Scholars get access to the full version of the Market Outlook. So there's a link in the description below. If you didn't get that link earlier, there's a link in the description below. Click that link and subscribe and watch. See the blog post and watch the full version over the weekend. If you want the full version every day of the week, you click this link right here, and that will take you to our foundation tier page. $29 a month gets access to all of our Market Outlook videos, including the trades we do at the end of each one. We actually put those trades on in real time, and we manage them in real time with our Market Outlook Live product. That's a live stream we do on our website at 3:30 Eastern Time every day. Like I said, we put on the trade before the market closes. So the trade that you'll see tonight's video, we've already put on before the market closed. And then we manage any existing trades to see whether we should close them or not. And then we track the results of all those trades. So today's November expiration, from the start to today's expiration, all of our trades have gained a total of $9,700 over the course of the year, right? From January expiration, or from January 1st through November expiration, $9,700 total dollars. We risk about $600 on average, a little over $600 on average per trade. And the most we've ever had at risk is $15,000 at any given time. So $9,700 gain is pretty decent, especially when you consider the cost is $29 a month. The cost for a year is $299 if you want to do the yearly, which you get 2 months for free. The cost of our elite education, a total 3-year package of all of our premium products and courses, that's $34.99. So more than covering the cost and then some of our elite here just by watching the Market Outlook videos every day for the past 12 months. So again, thank you for watching tonight. I appreciate it. Have a great rest of your weekend. Follow me at DavidSettle42 for more content between the videos. You can follow me on LinkedIn and Facebook as well. Subscribe to the YouTube channel with either this icon here or the red subscribe button down there. Click the thumbs up icon to like the video. That goes a long way for us. Comment on anything that stood out to you down there. Have a great weekend, and we'll see you all on Monday.